Yeah, very much. Okay, so good morning, everyone. Welcome officially to our weekly broadcast. Thank you for joining us. No doubt there'll be some people perhaps just, I would say, suffering or feeling the effects of maybe celebrations last night throughout most of England. Delighted that our English fan, who is our guest today, has still managed to make it on. So Colin Jowers, thank you very much for joining us.
I'm pleased to be here.
I believe you were watching the game in Dublin, which is where you're currently are. So that must have been a good experience.
It was surrounded by Danish fans, so which was interesting. More Danish than English supporters.
Very good, very good. So yeah, no, a very interesting night, and we were just before coming on air, we were discussing the correlation between success in sport and success in business and in property. And there's always lessons can be learned. But for today, let me just welcome everyone. Once again, I'm David Johnson, CEO of Leo Crowdfunding. We are an equity property crowdfunding platform. And my resident co-host, who beams in from the USA these days, is Mr. John Corey. Good morning.
Good day.
And you've managed to avoid all the hysteria and the hype and the focus on the England football team and managed to, if you had been in London, John, you would have been tortured with it.
So, yes, I mean, my father-in-law is a fan of sports and soccer, as we would call it. My mother-in-law is from Wales and very much a fan of watching the English team, at least if the Welsh team's not playing them. But my focus is more Tour de France during this season. So.
Everyone has their passions, and certainly mine's football, as you know. So it's been an interesting few weeks, which is great. Remind everyone we don't use the chat box during these sessions, so please put your comments and your questions into the Q&A, and John and myself can monitor that as we go along. So first of all, let me sort of again officially welcome and let him introduce himself. Our special guest today is Mr. Colin Jowers, and we're focusing today on an investor view of property crowdfunding. So Colin, again, thank you very much for joining us. Do you want to just introduce yourself, a bit about your background and your interest in property investment, please?
Yeah, sure. Hi. Yes, I've been investing for a few years in property, but I've spent my career in the City of London operationally for investment banking. So as a operations director and chief operating officer. Funnily enough, actually in investment research primarily, but across equities, fixed income, foreign exchange, and so on. So I know the market perspective fairly well. Recent years, I've sort of pivoted from banking into fintech. So I've always loved technology and how I can facilitate business and transform businesses. So I currently run a small fintech business, working with both investment banks and hedge funds and the like. And in addition to that, I invest, and my main focus is in property. I invest across directly with developers and through a raft of different platforms, including Leo.
Excellent. Thanks very much for that, and look forward to getting your views on this. It's always good to hear from people that have got experience on a variety of platforms, but also from a strong business background. I think that always helps. We normally start off with a quick market overview and the contrast today on the two bits of information that we've chosen. House prices dip as stamp duty holiday ends. I think that was pretty predictable in some respects, but against that, to balance that, Rightmove are talking about how the race for space has overtaken the race to beat the stamp duty deadline, and referring to people aren't as concerned about the stamp duty ending as they are about securing properties that have space. So I don't know, Colin, from your point of view, first of all, and then we'll let John come in. I mean, is this something that you kind of follow within the world of property? Have you got a take on stamp duty and this whole shift towards more space in properties?
I mean, apart from trends, general trends, but I think, it's the market's always changing, so it's actually adapting with that. So I think investors and developers and whatever, so long as they're agile and they're building to requirements, it doesn't make a huge amount of difference. I think as you say, I think the dip in house prices with stamp duty was bound to happen, but it's just it's a dip, no more than that.
So I don't know that there is a dip. I think it's really too early for any press to show there's a dip. Normally you should be looking at closed prices for completed deals, and it'd be hard to say there's been a dip since July 1st, but they will write it. And part of the reason to make this argument is there's been articles in other markets. There are very few places that have significant stamp duty or any stamp duty, and a lot of countries are seeing quite dramatic rises. So if they're having dramatic rises and they have no stamp duty holiday and there's no cliff, so like, why is the UK the only one that's having this dip because of stamp duty when everybody else is just seeing a rise? So I think it's a factor, it's a variable, it's emotional, it's in the press. But at the end of the day, the percentage difference is not even close to what happened to the prices. And people are looking for either moving in the city, moving out of the city, getting more space, getting an extra bedroom, splashing the cash because they haven't been spending on a bunch of other things. But people are, as the second article talks about, it's a race for space.
Yeah, no, I think that's exactly right. That there'll be changes, there'll be sort of tweaks, there'll be ups and downs, but I think trajectory currently still remains pretty constant. The other thing that caught my attention this week, which I think is a shift in the normal property market in the UK and has potential to, I think, have a significant impact on real estate, is this John Lewis unveiling their plans to build 10,000 rental homes. This is on the back of, it's either Tesco's or Sainsbury's doing something similar with their real estate. And I remember a few months ago, we mentioned that the Church of England were actually looking at sort of using some of their land for affordable housing. So there is this massive gap of like 350,000 new build houses required every year in the UK. I think last year was about 190 or something was built, so it's still a huge deficit. Can this type of move, can it go away to, you know, bridging that gap that's needed, and how will this affect either prices because of supply and demand, or just the overall state of the market?
So funny enough, I've been saying, and I did this at I guess it was a party that was out of office, held the thing at Westminster, one of the sort of official things. I was asked to be a representative as a landlord. There's this funny missing asset class in the UK. There's no multifamily residential. So in the US, we have an actual zoning designation, which in the UK would be planning designation for what is essentially therefore a commercial asset, but has multiple rental units that are all residential in use. Student block is the closest thing you see in the UK. This idea that institutions would buy property makes sense. I'm a little suspicious about banks. I don't see how that overlaps very well. John Lewis, I think, is being optimistic about, hey, we have a bunch of surplus space and we can convert it. Fine, but does it make sense to keep it on the balance sheet? It might. They're special, you know, they're employee owned. They're not your traditional institutional investor. But if you look at Germany, you look at the US, you look at a number of countries, there are large institutional investors that own lots and lots of residential housing, generally blocks because of management issues. It's easier that way. And it just makes sense as an asset class, particularly for insurance, because the prices tend to track the long-term pension liabilities of insurance companies. As we get out of defined benefit pension plans, fine, there's less need for that, but there's still this preponderance of institutions owning residential around the world, other than maybe the UK.
Yeah. Colin, any observations on this?
Only, you know, it makes sense for the retailers to leverage their assets. So they've got a huge amount of real estate which is underutilized. I mean, we're talking about residential, but I know John Lewis and others, they're looking at converting some of their portfolio into offices. What demand there will be, who will see, but clearly, you know, they're having to be creative. So where it will end, who knows?
That's a really good point about being creative. That's in a changing climate and an uncertain market, you know, being creative is the mindset you have to have if you're going to go forward. If you stand still, you're probably going to get sort of gobbled up and find you're left behind in the market. Okay, so the topic for today we wanted to cover was an investor view. I'm conscious that sort of over the months because we bring on fundraisers and we talk a lot about different types of deals and things like that. We thought it'd be good just to really focus in on like the view of an investor. Our intention is in a few weeks' time to run a panel and bring on about 5 or 6 investors and have a little bit of a discussion. But for this week, we thought would invite Colin on, partly because in the time of knowing him, I know he does have a really good handle on the world of property crowdfunding in the UK, and therefore I want to give him a bit more time to sort of unpeel the onion, is one of my favorite sayings that I know John likes. That must be an Irish saying, but want to just
at least that one I understand.
There's a few other ones you just don't quite. They're definitely colloquialisms from Ireland. So yeah, I thought it'd be good to really sort of dig in a little bit, Colin, this morning on some of your observations. So we're going to do this in sort of 4 questions over 15-20 minutes. So I suppose why do you invest in property? I think it's a really good place to start. What is it about property that you see as a good place to put money?
I think primarily because it's asset backed, so security. So, given the potential returns that can be earned from this, there's very few other places that aren't incredibly speculative where you can get the sort of returns that you can get within property. I've invested both asset backed and non-asset backed platforms, so know the space well, and I think COVID has been a case in point. It's demonstrated the strength of asset-backed investing, and the main one in that space, as far as I'm aware, is property. So I've invested in both crowdfunding and pure peer-to-peer as well, and interestingly, the non-asset backed has performed, well, not surprisingly, very poorly. So the default rates and so on has gone through the roof. So returns are okay, but nowhere near where they could and should have been. So I think that if I needed reminding, I've certainly been reminded that asset-backed investing is far more solid. So, I've pivoted even further into property asset-backed investing.
Okay. And then what is it about property crowdfunding you like? I mean, I guess you've invested directly into deals before in property. So when did you first become aware of property crowdfunding, and what was it that you liked about it?
Well, I invest in my own property, so I have commercial and residential. I invest directly with developers. I have a SaaS pension, and it was really actually setting up the SaaS pension that I dedicated time and energy in researching the space, getting to know people, networking, platforms, different opportunities, and all part of the due diligence. So I've refined it as I've gone along, and I think it's a mixture of all those things, from my own direct investments into property through to working with developers, which can be very good, but also it's far more hands-on, potentially a bit more painful, through to platforms. So the reason I do that, I have a big focus of my total wealth, including pension, focused on property, and it's partly a big part of that is diversification, so across all those different platforms and allocations.
Okay. Now you mentioned SaaS there. I know, John, SaaS is something that sort of is a hot topic for you. You've been looking at that and recognizing that there's probably more scope for SaaS to be used in property crowdfunding than people actually realize.
Well, it's so SaaS or other forms of UK pensions are quite positive for many investors when it comes to it's their money that the government is saying we're not going to tax while you keep it in your pension. And funny enough, most people seem to think you can invest in residential with your pension money. And actually you can. This is why the insurance companies and others all invest in pensions. There's a particular sort of criteria, but you can definitely invest in residential. A little mini plug, my monthly meeting coming up on the 13th, we're going to have someone speak about that who's a pension trustee. So whether it's a SaaS or some other structure, if your administrator, your trustees are comfortable with the asset class, then you can invest in real estate, and that can be residential, commercial, industrial, all kinds of types. I do want people to be cautious, though. This is your pension money. You really need to think about what's the long-term probability you're going to get that money back with a positive return. So don't just think it's, wow, I get a pot of money, let's go splash the cash.
Yeah, I think it's something that can develop, and as property crowdfunding matures as an industry, I think that's when, you know, sort of the more mainstream structures like pensions, SaaS pensions particularly, will more and more look at it once it's an established market on that front. So you want to comment on that, Colin, further?
Yeah. I think one of the things that I advise new SaaS trustees to do to begin with, I mean, you know, once you get your SaaS set up, you know, you have got a big pot of money. So how are you going to invest it? So the natural thing is just get it out there, follow the crowd and whatever, which I think can be quite dangerous. What I advise essentially newbie SaaS trustees is to invest through platforms. And the reason behind that, you know, I invest a chunk of my money through platforms for a diversification play. Also, it's educational as well. So I think if you're new to property investing, it's a great way to help get up to speed within a relatively short space of time on developers, how they work, the due diligence, the levels of security, what good looks like, what bad looks like, and all those things. And only risking more modest amounts of money, because you can do that whether it's a few hundred, few thousand, whatever, rather than have to invest 25% of your pot directly with one developer and really not know what you're doing. So, you know, that's high risk. The key thing that I think most trustees are taught when moving into SaaS for the first time is preservation of your capital. So the key thing is not to make a mistake. So it's better to get more modest returns to begin with as you get up to speed. And then as you become more experienced with this, the quality of your network improves and whatever, then possibly the risk dial can go up, but you've got confidence in those investments.
Yeah, no, I love the reference to both diversification and education. I think they're two very, very key aspects of, well, property investment in general, but particularly investing through a platform. So you did indicate that you have invested in a number of platforms, both equity and sort of debt peer-to-peer. Sort of high level, what do you look for in an offer? So if you get an email from a platform, or you get an invitation to a webinar from a platform promoting a particular deal, what's your sort of initial criteria for even deciding whether you're going to go any further and look at the deal?
Yeah, well, firstly, yes, I invest across a number of platforms. Part of the reason I invest with a number of developers and a number of platforms, and that's for diversification, no more than that. And also deal flow. I think the thing is, some platforms can offer good deal, but you know, the money sits in your e-wallet potentially for months as well. So it's trying to find that balance, which platforms work well. So for me, and really it depends on the cash flow. So, you know, ideally you want as much of your money invested as most of the time, because that's going to deliver the best returns. So for instance, when you get money back, you don't want it sat in your SaaS bank account for 6 months, because your overall returns for your fund, because it is a pension fund, or whether it's ISAs or whatever, is going to diminish. So the idea is to get it reinvested as quickly as possible. So it's a mixture of, as I get the emails about new alerts, it's a case of having a look at the deals. I mean, one, have I got cash ready to invest? And then second, you know, so if I don't, I still may well listen in because of the educational part, get to know what the offer is, get to know that developer if I don't know who it is or whatever, because, you know, I've got that name in my back pocket. Even if I don't have the funds at the moment, if they come to your platform in another 6 months' time, when I do, again, that's all part of the due diligence. So yeah, I mean, when it comes in, it really depends what my allocation looks like. You know, I mentioned I invest with on the debt side, so the bulk of my investment is with first charge security, but then I have an allocation for slightly higher risk side, so for second charge and for equity, so and of course planning gains and whatever. So it really depends what the funds are like, what my allocations are like, and whether, you know, it comes in at the right time.
So I've really enjoyed our interactions over this past really couple of months. I know you'd invested in our platform, I think the first one maybe about 9 months ago, 10 months ago from memory, but obviously sort of only knew you as a name on a spreadsheet at that point. But as we engaged, I was really sort of impressed with your almost investment philosophy, as you've talked about there, that you see how you can use property crowdfunding, multiple platforms, which I think there's a logic to that, right from, you know, peer-to-peer, where there's security involved and a fixed return, and certainly less risk in terms of the risk scale. But you're also open to go right through to a planning uplift deal, which obviously on a scale of risk from 1 to 10 is probably a 10 when it comes to equity being at risk. But you're quite happy to, if like, allocate your investment funds right across the spectrum, which I think is really what property crowdfunding needs as an industry. It's investors with your type of mindset and philosophy is what's going to grow the industry, having this sort of holistic approach. I think that's very important.
Yeah, and also I would add that from a, if you can invest, as I've suggested, but also in a tax efficient wrapper, so where you've got pensions, you've got ISA, and also your capital allowances. So, so equity crowdfunding, so Leo in this particular case works particularly well outside of pensions and ISAs. So, you've got your annual allowance, so, potentially you can have your personal funds invested as well. So, it's a mixture of all those things, I think, works particularly well for me anyway.
Yeah, okay. No, excellent. So last question then. Sorry, go ahead, John.
1 second. So it's really clear. So platforms like the one you're running, David, do allow people to invest as an individual. They also allow them to invest through a company if you have a company you want to invest from, and you can invest as a trust or a trustee or pension or other legal entity. So the platform, and this is pretty much across the whole sector, is fairly flexible. People can make their own decisions, and I might personally put in some money, then I might have my company put in some money, I might have my pension put in some money, all in the same deal, but they would be 3 separate investments because legally they're separate.
Yeah, that's a really good point, John. Actually, that the choice, if you like, in terms of the vehicle of your investing, definitely gives the investor more choice. So, last question then, Colin, as we wrap up, putting you in the spot a little bit, but you have mentioned that you have used obviously numerous platforms, and no doubt you've had some great experiences on platforms, and perhaps some that you haven't, or parts could have been done better. So in terms of Leo crowdfunding, what's been your experience, and any sort of things that you've found beneficial from our platform that sort of attracted you, and you've kind of thought, yep, I've got that bit right. So happy to hear your feedback.
Yeah, sure. I think there's very few playing in the equity space these days. I mean, there's a lot of platforms that have been all gone. I think you're there, so which is great, and it's a nice blend for some of the other platforms I use. So exposure to the equity deals and the planning uplifts and the like. The platform's easy to use, to navigate, to invest. I think the way the presentations are made by the developers, it's pretty straightforward. It's human as well. There's not the big sell which there are on some of the platforms. I think the due diligence as well, the packs are good. And the follow-ups, we're all busy people. So as and when a project is live, we just want a short, quick touch point just to see, traffic light systems, which I love in a professional capacity generally. So I was pleasantly surprised to see your own after my first deal that I invested in. I just want literally a 10-second look just to basically see things are on track. I look for outliers. So if everything's essentially green is good. I don't really need to look at it. If it's amber or red, that's the point I drill down into, and yours delivers that as well. Plus deal flow as well. And I would also add people like Hitesh coming back 2 or 3 times on the platform. Again, from a due diligence standpoint, that de-risks things for me, because I would prefer to deal with as few people as possible. When you do your due diligence, I don't just rely on the information that's presented across your platform. I do that each time, but once I've done it on a developer, that and they've done I've invested, they've delivered the project. Again, I'm very happy to go again, so long as the deal stacks. But generally speaking, that just de-risks things from my perspective.
Okay, no, that's an excellent. I really appreciate your feedback on that, and I'll give you a chance to have a 30-second wrap up at the end. So let's finish up with just some announcements and housekeeping. Sort of right on cue, actually, with what you mentioned there, Colin. Our next round of investor communications have been going out this week. Brenda's been beavering away in the background, getting those out. As we get more and more deals, this becomes more and more of a task every month, but it is vital that we communicate with the investors. So if you have currently invested in a deal, you've either already received this week or will receive today or tomorrow your monthly update, which is a double-sided A4, just giving you the key metrics on the deal. Obviously, we've got the broadcast. The quarterly webinars are due as well. So by the end of July, each of the fundraisers will be on a webinar, and the investors in that deal will be invited to that private webinar. It's only for those who've invested in the deal, the shareholders, and you get a chance to quiz the fundraiser sort of live on Zoom and find out what's happening with the deal. Site visits are something that we'll look at as and when they're appropriate in terms of lockdown restrictions, and certainly Hitesh's deal you mentioned in Ply Hill View would be a great one if we were able to get that direction. So let me just very quickly then run through some of the key announcements. So currently view deal on the platform is Hightown Lees in Banbury. We actually ran a webinar last night. I think actually, Colin, you were on that webinar, I believe.
Yes.
Yeah, so I thought it went very, very well last night. We're introduced to Michelle and her husband Brendan, who are very much part of this this deal with Hitesh. This is a single dwelling being constructed in Banbury, and the recording is on YouTube now. So if anyone wants to just go to our YouTube channel, you can watch the recording of that. It'll also be sent to those who were on it in the webinar last night. You'll get a copy of this. So this project goes live, yes, next Thursday at 12 noon. And again, you can go on to the pitch pages, get a hold of the offer document, and read all about the ins and outs of this project. And of course, you can register your interest. It's very helpful to the fundraiser and us as a platform. If you do feel this is an investment that you're interested in making and you're doing your due diligence on it, then if you leave your email address, an amount that you may be interested in investing, that allows us to communicate directly with you on this project. We've got so many projects on the go at the minute. We don't want to just bombard the whole investor database with just multiple messages. Whereas if someone registered their interest, it means we can segment that group of registered people and make sure they're getting information about this deal. So if you haven't already, jump on and register your interest, and say live next Thursday at 12 noon. The Citygate project is, we're just finishing off the shareholder agreement with it. And then once that is out to the current investors, we'll then be opening it live for investment for a couple of weeks as we move on towards reaching the 600,000 target on this one. So again, you can keep an eye on that as it progresses. And last week we had Becky on from Smiling Properties. So for those that maybe missed that, you can see the recording, but you can go to the case study on the platform and again leave your interest if this project is something that you would like to see more of, or if there was a project like this you may be interested in investing in it. Again, you can leave your details. And of course, the previous week we had Dirk, and he and his wife were able to talk us through.
So on both of these, so Dirk and his wife Audrey were talking, also Becky were talking. If you like the people, as Colin was talking about, if you're starting to think that the individuals are worthy of your time and maybe your money, this is a way of signaling to them that these are the types of deals you like. So when they are out looking for deals, they can find more of a similar nature because there's a number of investors who are interested in seeing these deals.
Yeah, it's a really good sort of segmentation. As you say, John, it might be that some fundraisers will put up 2 or 3 different types of deals and see which one gets the most traction, and then that's the one they can focus on in terms of bringing it to the platform. So yeah, so I encourage you to go on to those case studies, download them, and have a look at them. And again, just remember, everyone, refer a friend has actually been going really well. We're absolutely delighted with how this has went. So if you're on the platform, you can go to your about the profile at the top, scroll down, and you'll get your own unique sort of referral code that you can give to someone. And when they register on the platform and make an investment, then we'll credit your e-wallet with £50. So it's a really good opportunity just to refer our platform to some friends and family. For the introducers then, the more formal introducers, and this starts when someone's accumulated £10,000 of introduced funds through investors. We have our training to kick this off. So somebody can't, from a compliance point of view and a regulatory point of view, be out there promoting this until they've been through the training. So Thursday, the 22nd of July at 7 p.m. will be our training for those introducers who have already signed up for this. So if you're interested in signing up for this, you can see the email there, introducer@leocrowdfunding.com, and we'll be able to, Tony Allner, our Chief Operating Officer, he'll be in touch with you, get you all the relevant paperwork, and then you can attend the training on Thursday, the 22nd of July, 7 p.m., and that will get you ready to start being an introducer. We pivot on to Clubhouse at 11 o'clock. We stay on there for half an hour, 40 minutes, just having a general discussion about the world of property crowdfunding. I'm not sure, Colin, are you a Clubhouse user?
I'm not, no.
You haven't got that far. Are you Apple or Android?
Apple.
We'll just move on swiftly then. We'll move on swiftly. And that's it for today. So thank you very much for joining the broadcast. Next week is actually Hitesh, Michelle, and Brendan, because we'll be going live at 12 o'clock with their deal. So I thought it'd be really good, particularly get Michelle and Brendan on, introduce them to our weekly broadcast, and they'll be talking through a bit about their background. It's a really good team, the JV partnership between Michelle, Brendan, and Hitesh on this one. So they're going to be explaining their backgrounds next Thursday, 10 o'clock, and then we'll be going live at 12. So Colin, give you a chance to wrap up any thoughts or any points you want to make.
I think you've covered everything. All I would say is just keep bringing the deals.
We'll do our best on that front. And John, any last minute takeaways?
I like Colin's point that, as a passive investor, he wants to be able to look at deals. So the job of the platform is to bring deals forward and let the investors make their decision.
Yeah, brilliant. Okay, listen, thank you very much. Again, thanks, Colin, for joining. Thanks, John, again, for getting out of your bed early US time to join us. Always a pleasure. And wish everyone all the best for their Thursday and the rest of their weekend. And of course, we have to finish with wishing England all success on Sunday in the final. And you never know, football just may be coming home since 1966. With that, all the best. Goodbye. Good luck.
Bye.